Hello, this is David Harper of Bionic Turtle with a 5-minute overview of securitization and the key players in a securitization for FRM candidates. This is from Christopher Culp's Chapter 16, and I start with the credit-sensitive assets. These could be, for example, trade receivables or mortgage loans. In the securitization, there must be an originator because the originator is the original owner of the credit-sensitive assets. And the originator may have several motives for entering into the securitization, but the two most common are, first, the originator wants to convert relatively illiquid credit-sensitive assets into cash. That is to say, to monetize these credit-sensitive assets. A second primary motive is to remove these credit-sensitive assets from the originator's balance sheet. If the originator is not a bank, that's if the originator is a non-financial corporation, typically the originator will hire a sponsor to provide advice on the securitization. That sponsor will typically charge advisory fees and not take an equity stake. And then we get to the heart of the securitization, which is the special purpose entity that's typically built just for the occasion of the securitization. It's a special purpose entity or special purpose vehicle, and the credit-sensitive assets are transferred or conveyed in a true sale to the special purpose entity or vehicle. So there are criteria that must be achieved to meet the legal definition of a true sale, and it's the true sale that allows the originator to transfer these credit-sensitive assets to this other entity and make these assets bankruptcy remote from the originator. So this creates legal and accounting distance between the originator and the special purpose entity. Now, the credit-sensitive assets are typically deposited with a trustee. The trustee is entrusted with looking out for the investors, which aren't yet shown on my diagram. So there will typically also be a custodian and maybe even a servicer if servicing is provided by a different firm. The underwriters are responsible for marketing and distributing the securities. So the special purpose entity, now essentially owning the credit-sensitive assets, will issue securities, and the underwriter will market and distribute them to investors. Oftentimes, in a structured finance securitization, these securities are going to be tranched in a hierarchy, that is to say senior, mezzanine, and junior securities, each with a different claim on the underlying cash flow or cash flow waterfall generated by the credit-sensitive assets. And so now we can understand the essential bargain in the securitization, because the investors are issued securities and they pay the initial purchase price. That's this green line. That's their cash, most of which ends up with the originator, again, who's monetizing these assets. In exchange for that cash, that investment, the investors are then participating in the cash flow waterfall. These credit-sensitive assets started here, they're transferred here, they generate cash flow, that's principal and interest, and the division of that principal and interest is decided by the rules that are defined in those securities that are issued. Finally, there will be several players additionally who assist in the construction and maintenance of the securitization. Generally, they are paid with fees for services provided. That includes the structuring agent, who is responsible for modeling the principal and interest cash flow waterfall and all of the assumptions that are so critical to the initial valuation of these different tranches. This structuring agent may be the same as the sponsor or may not. The law firm is critical to the securitization. The law firm issues the soundness opinions and considers other issues like the tax treatment of the securitization. And finally, a source of great recent controversy, but nonetheless critical to the structured finance securitization, are the rating agencies. These rating agencies issue ratings on these tranched securities that are issued to investors. And these are in part critical because, for example, monoline insurers will not provide financial guarantees to support the structure without ratings on the securitization. So this is an overview of the key players in the securitization. This is David Harper of the Bionic Turtle. Thanks for your time.